Good evening, everybody. All right, a lot of people ask, what's your office look like? That's what my office looks like. Behind me, anyways. Oh, the Victrolas, definitely they work. Yeah, that's not tonight that we had the fire in there, but makes it nice and cozy with the wood paneling and the fire. Yeah, I had two Victrola collections, one in Houston and one in Pittsburgh. So when I moved to Pittsburgh, I had two collections, so I got way more Victrolas than I need. Then I've got just bookcases of antique toys. Now, why I was collecting antique toys, I have no idea, but it seemed fun at the time. All right. That's right. Okay, as we can see, we've had that reversal. This is I hope one of the just the predominant things. Yeah, we had to close out the credit card, and the problem with closing out the credit card, I have so many automatic things paid on the credit card. Now I have to go back and figure out who's automatic pay and uh, and get that all straightened out again. So, anyways, the as we can see with the breach of the T line to the upside with a bullish Harami a few days ago on the Dow, and then bullish confirmation. This is where we get added confirmation. I think. Is everybody seeing the full chart? Ah, all right. Are you just, let's see. Now is that the full chart? All right. Okay. There we go. I guess everybody's all right now. So this is where you kind of observe the obvious. The obvious is with stochastics coming up and we've had a buy signal confirmed. And then the confirmation during a trend is much easier to evaluate. When they come back and when they consolidate right back to something. In this case, the Dow came back and used the 3T line and the 20 as a, uh, uh, a support level. The NASDAQ came back and used the T line as a support level after kind of this, what we call the stutter step. There's your strong signal, there's your pullback, there's your stutter step, which is all kind of good indication that things should be moving higher. But the thing that should have kept everybody from panicking today was when the Dow was down 166 points at one time, I think the transportation index was still trading positive. So that's always a good indication that we're not bailing out, everything's crashing, it's just backing and filling. When one index is trading positive and another index is when the other index is backing off. And the sector that got weak today again was the oil sector. With oil prices coming back off, and again, this is where you kind of observe the obvious. The obvious is, seems like the 20-day moving average. I remember we had mentioned before, a lot of people ask, when do you use the 20? The 20 usually becomes more prominent when the trend is consistent or stays consistent in a direction for quite a while. So today we had an evening star signal right at the 20 and the T line. So where could it go? Can't imagine it could go here, but one thing I've discovered about prices is they will always go where you can't imagine they will go to. So I'd watch crude oil prices. Now, the conflict of that, or the converse of that, would be if they turn this around and started back up, kind of breaking this level with a J-hook pattern that tells us we've got a new dynamic in the in that move. We've been long cocoa here. And this is kind of the things that you want to observe, and you get much better observation when you can see the graphics this much better trend channel. I have this trend channel in progress. So when they bounced off the bottom here, hit the 50, pulled back, but now if we see it come back up and do our little bobble, where's our next target? To the top of the trend channel. So again, I'm pointing this out as at least we've got, knowing what our patterns are and what human nature does time after time, at least we can kind of calculate where things should be going. And when it doesn't do that, we know it should be back out of the trade and move on to something else. Oh, and so that's kind of the same scenario of, I don't know how long this, oops, this is a cattle, and I'm just trying to see if there's, yep, we could do this. If I can do this correctly. And I can draw a line down through the tops. Now let's make this bigger, which tells us if we're in a wave 1, wave 2, if wave 3, if this resistance level is broken, now what do we have? We have wave 3 potential, would probably take us up to the 200-day moving average. If it fails here, we know this downtrending channel is still in progress, and instead of it breaking through this level, now we have a little double top. They're going to be taking it back down. So just makes it easier, and not only analyzing what the overall trend is doing, but seeing what type of signals occur at levels where something should be changing. Oh, pshaw, look at this. All right. Oh, don't do that. Okay. Oh, and so when we look at the gold chart, we know what this is. A big fry pan bottom. We're getting up here in the overbought area, right about when we get to the 200-day moving average. So one or two things are going to happen when we get here. We could have that big breakout to the upside, or if it fails and starts pulling back, we know came up and failed, it's time to be back out of gold. Now, the other side of the coin is, one of the things that we always have to be concerned about is gold is usually a fear factor. When fear is building up, gold prices go up. And right now, there doesn't seem to be anything out there in the world that tells us there's anything crucial going on. But there's always that, I don't know what word you would use it, innate forecasting that even if something's not happening, for some reason gold is going up, and if it breaks out, it's usually because of some sort of situation. So anyways, I'm just kind of saying if they break this out, that means something catastrophic. No, this is I think it's GLD on the TC2000, Diane. This is where we're looking at CQG on these charts. Okay, so with that, that's why gold stocks have been acting well. Look at AU. This is why we recommended this one, because notice what happened on the pullback here is basically your bobble isn't Dow down 100 points. The fear of, yeah, or even bigger than that. But that could be the, that's what I'm saying is something could be happening. Now, remember I can remember back in 2000, when was it, 2001 and 9/11, the Dow had turned over, or the indexes had turned over and were selling off pretty hard about a week before 9/11. So when 9/11 did hit, and I think they shut the market down for a day or so, or a few days, I mean, it was already pulling back. And so it just seemed very coincidental. And the other thing I was pointing out, I forget when, but when the crash hit in October of 1929, it wasn't that all of a sudden it turned over. The market had been heading down ever since August. So it wasn't like um, all of a sudden things in one day or 1 week turn around. So anyways, but with that, if we know that gold is trading higher, things like Nugget have very good patterns. Bottomed out. Now we did the little bobble, heading up further. Fear factor political candidates. That could be too. How about most all world currencies are being devalued and affecting gold prices? That could be too. Let's see. I didn't even look at the dollar. The dollar's really not doing a whole heck of a lot, been moving sideways here for a while. Okay, there are a lot of good chart patterns obviously setting up. We recommended ACAT because of the belt hold piercing signal and then bullish confirmation. I'd still be a buyer of this one, especially if they open this positive and do a doji sandwich, same magnitude as this, which should be breaking this downward trend channel, making your next target up here at the 200-day moving average. So the recommendation is based on what type of signals are we seeing? We're seeing a reversal signal, a piercing signal, confirmed, and now we're right at a resistance level, and we know what the next potential signal could be, that a positive open would tell us we've got a doji sandwich. On the other hand, if we bought today, we have a very simple place to put our stop, back here below today's low. Because if they were able to come back down through there, what did that tell us about our resistance level? It was still acting as resistance. We want to be right back out of that trade. Slurp, SLP, this is the classic. Again, a recognizable high profit pattern. Big fry pan bottom, price move. Pull back, there's your piercing signal again. Another one, you can still be buying on positive trading because what would our classic pattern be telling us? Our J-hook pattern is now in progress. And where would your stop be on this one? Right back here at the T-line. Now, S acting well, but today it did a little bit of profit taking. And where did the profit taking bring us back to? Right back to the 3T line. So this also makes it fairly simple. If they open this lower tomorrow, we could probably take some profits as anticipation is coming back to test the T line. If it opens flat and trades positive, stay in it. Now you watch to see what it does once it gets to the 200-day moving average. Because oil prices were backing off, some of the oils are backing off. Whiting came back down right to the T line. So we still want to watch this to make sure it opens flat or positive. If it opens lower, what's it tell us about our trend? Our trend is still in progress. They're still taking it down. And Cuervo, this bigger. And this is what we kind of call our stutter step. Started with a piercing signal, took it up, bounced it back down, brought in another strong buy signal, the Morningstar signal. Traded a little bit positive today. Another simple strategy. If it opens positive and starts trading positive, what type of pattern do we have? A doji sandwich. After a Morningstar, we've got the McMuffin. And what do we expect coming after a McMuffin? That wasn't it. There's our McMuffin. This is what we expect after a McMuffin. SMTC, there's those belt holds. So this is where you kind of put your analysis all together. Stochastic starting back up. You got a belt hold signal. It's confirming. You have a close above the T-line. They break out through this level. Another belt hold. And remember what the belt holds tell us or indicate for us. That they've wiped out a lot of sellers and they come right back up again. That tells me that we're in wave 3, and I don't know what wave 1 was. Wave 1 was fairly substantial, making this one a very high probability trade. Oh, I'm sure somebody could write a formula for the McMuffin. Sienna or Santra. All you can do is stay long on this one, as long as it stays above the T line. And we recommended 5.9. I don't know whether there was a kind of a fry pan bottom, strong price move. Notice where it's trading today. This is kind of the little observations you want to watch when you're looking for confirmation. Notice this little gap. Not anything significant here, but significant in the sense that if you drew a line right down through here, that's where they gapped up through. They've gapped up through this downtrending channel, telling you everybody kind of could see there was a little downtrending channel. When they gap through it, tells you there's a new sentiment coming into this. Mario, yes, we've got the videos on the high profit patterns. And Cray, we recommended there a while back. Want to keep this one in the portfolio. Another one that kind of had a little downtrending channel, gap up with your best friend, telling us we're in the next wave, probably the same magnitude as this wave over here. So this isn't rocket science. Basically, it's just looking for the patterns. The biggies, Apple had a Morningstar type signal, but it didn't confirm. What's our confirmation? We need to see a buy signal, Morningstar signal, very strong, but it didn't confirm today. Now, would you be a buyer of Apple? Yeah, if it came back up through this level and telling us that the T-line's not acting as resistance, that would probably be a good indication that we're now have reversed, starting in an uptrend. Some of the other biggies, Netflix. We kind of watched out for this yesterday when we were analyzing it in the training. We already had some dojis down here in the oversold area, and we had a very simple stop loss or a profit taking if you were short. That if they were able to bring it back up through the high of the doji of Friday, you wanted to close out the position. Even though it closed back slightly below there, what's it all indicating right here in the oversold area? Doji, now some buying right here at this level. That's pretty much indicating there's definitely some buying coming in here. If you closed out the position here, you just simply reshorted. If it came back down through here, that would negate all those signals. Oh, Apple, not so much a doji sandwich, but the doji sandwich potential, meaning if they opened it positive after a doji, you could probably get another good move out of it. Usually you like to see the doji right about the same level as where it closed. It could. I think Google might have a positive effect on everybody. I don't know where Google was trading last, but I thought I saw it up here at the 820 level for a while, which means they've broken out through this level. Right now it's 803. That's still above the highs here. So that if they open Google tomorrow at 8 and start trading at positive, remember the markets move based upon investor sentiment. And if one of the biggies has good investor sentiment behind it, everybody else is going to feel a little bit more confident. Chipotle, there's your slow curve setting up. So we've had the stutter step, in this case the stutter step being that slow curve. You didn't really have a true signal down here, so that's why you would not consider this a reversal. But you're probably going to, whenever I see a up day in a downtrend, it's telling me, yeah, you're probably going to have a bounce, but it's not going to be a full-scale reversal. Now that they've pulled it back and started the slow curve, and then you had your little inverted hammer, bullish confirmation, that tells me that that's the buying. And Chipotle has earnings tomorrow. Okay. So I'd be watching to see how they open this tomorrow, because if they can get it back up to the 50, I don't know if that's the, yeah, it looks like that's where the resistance level would be. At least you got a quick little trade out of it. Oh, yeah, Facebook, after the kicker signal, I'd expect that to continue the 45 degree. Now Amazon having a hard time getting out of its own way here. So you got to see whether they can bottom this. Today, indecisive trading. So that's telling you a story. Tomorrow they're probably going to move it in the direction how they open it. Tesla, another one of the biggies. Big bullish engulfing signal with a booster closing above the T-line. If this opens positive, now you've got some upside, probably back up to the 50-day moving average. And that's about it on the biggies. Some of the other ones that we've been following, XRS. Notice a little kind of the flutter kicker signal here. This all started with your best friend down here. You want to stay long on this because here's a perfect example of your J-hook pattern. Wave 1, wave 2, wave 3, starting with your best friend and a bullish flutter kicker type signal. I would suspect that if this moved from 30 to 47, 17 points, that takes you up into the, I can figure this out, into the $62 area. Gig was one that David L. pointed out today. Another nice J-hook pattern. Expect some more upside, not a high price stock, but they work just as well on any candlesticks, work just as well on a $3 stock as a $300 stock. EROS. You can see the slow curve. You can see the scoop pattern. Probably more upside here. Same scenario on RRTS. Little scoop pattern setting up. Wouldn't be afraid to be buying this one with the anticipation that they're going to bring it up to the 50. If they break out through the 50, then your slingshot effect will be in effect. And there was another one, light. Oh, more of wave 3. This one can be bought. 14 to 22, 8 points, taking you up into about the $28 range. And HIFR. Oh, there it is. There's your little bobble. There's kind of your scoop pattern. I would suspect your next target is up somewhere in here. So if they got up to the handle, more than likely they would be taking it up to the 200-day moving average. Oops, who wrote that? Terrible handwriting. Another J-hook pattern. This is IESC. I forget what the volume is on this, but apparently it was good enough. But again, 8 to 11 and a half, right, taking you up into the $14, $15 range. Okay. STX. There's that gap up. It's bigger. Then they're going to move it in the direction of how they open it after a doji. I would suspect your next target right now is at the 200-day moving average and possibly higher. And the reason definitely possibly higher because this is a very strong signal. There's kind of your flutter kicker signal starting in this one off. AQXP, another bobble. Telling me there's probably more upside. If they break through here, that means your next target is up in this range. And the silver stocks, just like the gold stocks, silver chart looks good. Notice the bobble here. Where's your next target? At least up here to the 200-day moving average. And SA, kind of your doji sandwich after a left-right combo, after a series of dojis, telling me we've got more upside, especially if they bring it up through the 200 tomorrow. They'll probably bring it up to at least the 50. David L. was showing people Trove today. This one I'd be ready to buy on a positive open tomorrow, anticipating something that looks just like STX. So remember, when they gap a price up and do a doji, it makes it very simple. They're going to move it in the direction how they open it, and usually if they open it positive, that means there's a strong force starting in these stocks. Did he point out SVU? Yeah, that's decent. SVU I would put in the same category as USG, one we recommended today. Had it traded positive. Oh, for crying out loud. For some reason, USG kind of slows this system down. NMIH, another good-looking little chart. Kind of a scoop pattern. I would anticipate coming up and testing the 50 up also. Hold on to your individual requests. We'll get to them when I tell Jim to do the double line. Right now, we're just trying to go through all the ones that definitely look good for possible trades. There's kind of your trend kicker. They open here and close here. The next day, they gap it up above the previous day's open and go the opposite direction. Yeah, Marabuzzo is a doesn't have any wicks to it. This one, breaking through the 50, kind of a little mini scoop. I'd be long or staying long on this one. PCRX, big morning star signal. I'd be ready to buy this one on positive trading with the anticipation that if this is wave one and this is wave two, and notice where it was trying to support right here on the 200, if it comes back up through there, we could be in another strong move that would take you up into this same trajectory. Strong trajectory, consolidation, and usually they get in a hurry to take it right back up into that trajectory. Mario, yeah, I've got some different trading accounts that I do for other people. And OPHT, right smack dab on the 200. I'd watch this one, at least for a bounce back up to the 50. Now, STR, showing this one because there's your slow curve, there's your expected results. HAE, that slow curve, this is where we want to kind of look for those big breakouts. So that's why something like PM, slow curve, that could have a quick pop back up to this level, which would be the 50-day moving average. I always like to keep an eye on these type of trade setups because usually the results, as you have seen in the last few here, can get quite excessive. They're kind of leading up to something big happening. And VGS. Oh, there was something here. Oh, I guess this was more just to say, all right, when you see that reversal signal and a gap up through the T line, that's usually a very strong chart setup. And Pantry Pride, there's another slow curve right off the 50. That has a good possibility of taking a quick move right back up to the top of that trend channel. Oh, Diane, I'm going too fast. You have to usually put down which one you're referring to. Con, Morningstar Signal. Another one that I wouldn't be afraid to be buying on positive trading tomorrow because that would tell me they're confirming the Morningstar signal as well as telling you that the T-line is not being breached anymore. PCRX, no, I'd be buying on the positive open with the anticipation that it's going to be heading up at least to the 50-day moving average. Doesn't necessarily have to close tomorrow above it. Yeah, I'd just like to see it trade above the 200. SFM, Spouts, doing a little reversal. Once again, there's your trend. There's your pullback. It's not unusual to see them do a very hurried move back up to that trend area. And BETR, staying above the T line, and you're right here at the 50. These are the ones that are great, that if you see it closing right at the T or at the major resistance level, they open it positive. Everybody sees that it's opening positive. So if it opens positive, you want to be buying immediately. SFM, Cradle Potential. Yeah, you could call it a cradle. It's not as smooth as you want it to be. It's just more, it looks more like a little double bottom, but notice how this got started, that little kicker type signal. Larry, I don't trade the indexes. Uh, you can, if it's safer to trade the indexes if you're trading much bigger money, because that way you don't have the risk of being in an individual stock position. You've got at least it's not going to move percentage-wise as an individual stock, but it's going to be safer as long as you can analyze what the trend is for that sector. So I'd be more apt to trade big money on the ETFs. A lot of the things that I'm doing, instead of showing people how to trade the ETFs, I'm trying to show what to do with the individual stocks. Then obviously that can extrapolate back to trading the ETFs or trading the futures on the indexes. Remember, the candlestick signals work effectively for anything that has fear and greed in it. And Unisys, this one was very easy. If it opened positive and traded positive today, you could be buying it. Anytime you see that big run up and they pull it back, that profit taking, especially when it's a signal, in this case kind of a kicker signal. If they open up positive again, that means the profit taking's over. That signal and that trend is still in progress. And then David also pointed out this one. Big price move. Now, I think it was trading after hours up here. These are the type, if you're an aggressive trader, that I think they announced that something in phase 3 was approved. These are the type that can give you a big, fast move. This is where if it opened positive tomorrow, I'd immediately flip to my 10-minute chart and be trading it. But remember, you got a signal here, kind of a scoop, doji, 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 doji breakout, telling you there's now some big action in progress. I just don't know why USG doesn't come up on these charts. Just makes you want to kick your grandmother. And HLCP, there's no curve scoop pattern. This one's very simple. If it opens positive tomorrow, you want to be buying it, because it looks like you could draw a little trend channel right down through the 50, and it breached the 50 today. I wouldn't be afraid to be looking at this one based on a scoop pattern slingshot effect. And Gimmo, another one that's having the kind of a double flutter kicker setup and a scoop pattern. Another one that looks very strong, that if it opened positive tomorrow, you want to be buying it immediately with the anticipation if they break out through here, you're going to have a good strong run. Okay, so as we can see, there's lots of good-looking charts. Right now, the assumption has to be that we're in an uptrend as long as we stay above the T-line. And that's being indicated by both the Dow and the and the NASDAQ. So notice where this is bottoming out right here. Right about the same places that bottomed out before. So what's that tell us about this overall market trend? Once again, you can come up here and pretty much do your trend channel. Kind of right through the tops, right through the bottoms. So this is where you observe the obvious. This is where they're buying. This is where they're selling. So I know that the T-line is the most important trend we follow. How much emphasis should be placed on the 20 compared to the 50? The 20 is not as crucial. As I say, the 20 becomes more effective. What were we looking at? Oh, crude oil. 20 becomes more important when the trend remains fairly consistent. So as we can see in the crude oil chart, they could never, once they've failed the 50 and never bring it back up, seems like the 20 is now the critical factor. Now, we don't trade based upon the 20 or the 50. We trade based upon the signals, and then we use all those other indicators to tell us if they're support or resistance. Yes. When you have an engulfing candle, you're going to have, let's see if I can, you're going to have a bearish engulfing signal, or you have bullish engulfing signals. So what you want to see on a bearish engulfing signal is weakness following that. On a bullish engulfing signal, you want to see bullish confirmation. So this is MasterCard that had a big bullish engulfing signal on Friday, did some consolidation today, but this makes it very simple. If they came back up through this level after a doji, that would tell us this reversal has occurred. Oh, let's see. This is the oil fund, and same scenario on the oil fund as the oil prices. The 20-day moving average seems to be the resistance level. Okay, any general questions on candlesticks? I didn't do shorts because we're already in some shorts. INSEE, we're still short on kind of the bearish J-hook pattern. Let's see. The bobble, I'm trying to remember the bobble. A bobble is when they come up and they hit the resistance level. Then they pull back, and it's usually to the T-line. And when they come back up, usually they hold at the T-line. But then when they come up and retest the resistance level, if they go through, that means you're going to have a good strong uptrend because it does two things. First, it tells us we got a bobble, and usually the T-line is our support. And the if it goes through, then you usually have a J-hook pattern confirming the bobble. The McMuffin is when you have a Morningstar signal followed by a doji sandwich. And our doji sandwich is a bullish candle, a doji, and then remember our simple rule of the doji. Prices are usually going to move in the direction of how they open after the doji. So there's our doji sandwich. There's our Morningstar signal, or our morning sandwich, or our McMuffin. Let's see, CSO is a double inverse. Yes, so you could, if you think crude oil is going down, you could be buying this one. Is there an engulfing signal, either bullish or bearish? What subsequent candles? Yes. So the latest candle always wins. Hold on. Oops, I missed some up here. When do you place your stop after purchasing the stock? Yeah, Cheryl. Now I will place stops. Not so much on the stocks because I'm sitting here, but there's times where I'll put stops in. Oh, say we were long coffee. So we saw that twice it failed at the 50. So where was a good logical place to put your stop? Back below this level. If they failed to go up through and came back through that level, we wanted to be out of the trade. We're back in the trade because they're still trading back up above the T-line. And essentially, right now in coffee, it looks like we've got a little bobble setting up. Where they hit the resistance level, they've come back to the T-line, especially if they open positive tomorrow. That means they're still probably taking it up. We'll see what it does once it gets to the 50 again. I did not see how you had your chart set up to watch the top tickers when the market opens. Oh, that's over on, let's say if you're using something like TCNet. Oops, I'll have to do this. That made a little bit. Here's my charts, and then I have the stocks that I'm watching over here, and it's just very easy. You can, in the morning, you can see which ones. This, you can see whether they're up or down, whether they're green or whether they're producing a red. So, um, so once you set up your watch list and you get it narrowed down, I know this is kind of, let's say we took it down to 5. That we can see what each one is doing. So if something opens up and it's red, see, I think Olin was one of our recommendations. No, USG was. Olin was a good one because notice what it did. It did a doji gap up through this downtrending channel, your best friend, but it didn't open positive today, so we didn't jump or didn't buy it from the get-go. Now, had it opened lower and then come back up through the previous day's close, when it opened lower and started up, what type of candle was it forming? We could easily see it was forming another green candle. We would have been buying when it came back up through the open, because this is what our signal was telling us it was time to be buying. If there is an engulfing signal, either bullish or bearish, what candles sequence will cancel this? Does this latest signal always win? Yes, if I decided I was going to buy MasterCard, or somebody else asked, why isn't this considered a belt hold? It not that far out of the trading range. Now, if it had opened way down here and come back up, yeah, that would have given me more of the impression it was a belt hold. But it doesn't really matter what you name it. Right now, we can see they gapped it down and did a nice bullish engulfing. Now, this is the buy signal. So if this is the candle that told us the bulls were in control, the Japanese rice traders make it very simple. What would negate this signal? Well, if it opened and the bears were able to close it back below the halfway point of this candle, that tells you the bears are still in control. You want to be right back out of that trade. So Dan, you can call it a belt holder if you wanted to. And it doesn't matter what the terminology is. The further they moved it down here and brought it back up, the more you could call it a belt hold. What were the belt holds? I keep forgetting. These are belt holds. You can see that this is kind of the trading range, and they gapped it way down and brought it back in to the trading range. Now, a belt hold could be just a belt hold back into the trading range, or a belt hold piercing signal closing more than halfway up this candle, or a belt hold bullish engulfing signal if they closed it above that candle, or above the open of that candle. And this is, yeah, you could call this kind of your belt hold piercing signal. Now, if it had opened right here and came up, I just called it a piercing signal. The further they open this down and bring it back up, you can add the terminology belt hold to it. How fast do you usually get out of a stock you don't want to keep for the long run? Say if it starts falling to a downtrend, would you just sell it all off? Yes. Yes, there's only if I get into something, let's say for example, let's move over here. If I bought this and my normal position is, say for $100,000 account would be $10,000 for 10 positions, I'd be buying $10,000 worth. But when it came back and closed below the halfway point, it's gone. It's not a good trade. Close it out and move on to something else. Can you explain for a stock like Neos? I just saw it gap up 2 days ago. I'm glad I did not buy it. I was expected to buy again today and glad I didn't. Let's see. Yes. This one, if it opened up here, that's a good gap up, but that's the message. And the message is different than a best friend, where a best friend opens and trades positive. The message is it opens and trades down. That's not a good time to get in because we don't know how far they're going to take profits. Now, the next day, they do exactly what we would have thought they should do, kind of a little bullish candle. So what's our criteria from that point? If it opens positive, we can start buying because this told us the selling had stopped and we already got the message. There's a powerful force to be in here. As we can see, with it opening lower, there's no reason to get into this trade. STX, on the other hand, is the opposite of that. They gapped it up, did a doji. What do we know about the doji? Prices are going to move in the direction of how they open after a doji. This tells me I can still be buying this one because now I've got that kicker type signal with a flutter in between. Are the candle type scans available? Jay, if you go to our website, candlestickforum.com, and go to the left-hand column, somewhere in there, it should say TC 2000 formulas. Click on that, and there's a whole page of the signals and the formulas, and all you have to do is copy and paste them. If the Dow opens lower tomorrow and pulls back below today's low, would this negate the reversal, assuming the same on the S&P, or does it need to close back below the T-line? No, right now they needs to close back below the T-line. If it opened lower, yeah, I'd still give it the benefit of the doubt because what do we have as our top criteria? A bullish and go or a bullish Harami confirmed. So right now, I'd basically stay long until we see a candlestick sell signal and a close below the T-line. Now, if it had enough strength to open lower and close below the T-line tomorrow, yeah, that now tells me they don't have force going in this direction, that this may have just been a quick bounce. Okay. Got all the questions? All right, Jim, go ahead and do the double line. And then 3.4 seconds, do the next double line. Yum Brands, that's a good looking chart. Right now, all you can do is stay long on this little scoop pattern. All right. Hope you did the other double line because we're still scrolling way past. KMI pulled back today, but it didn't close below the T-line, and it didn't do a sell signal. Now, it's not great, but we basically need to see this stay above the T-line. If it closes below the T-line, close it out. But that'll also be a function of what they do with probably oil prices tomorrow. ESPR. There's your little stutter step, bullish engulfing, failure at there, pulling back. I'd be a buyer of this one. Probably I want to see it get enough strength to get up through the 20, but I wouldn't be afraid to start buying this one. Didn't we do STRP? Yes, just stay long. Nothing here yet. Starbucks. You can now be buying this one. It's not very exciting, but it has broken this downtrending channel. Notice how they did it. They gapped up through that level. So I would stay long on Starbucks right now. Boeing, this would have been, if I was short here, I would have covered on this day right here. You had a bullish Harami and a positive open. Should have covered the trade. Because where was the next likely target? Up here to the T-line. Now you have to just watch to see if it's going to get up through the T-line. At this point, I wouldn't be short, and I definitely wouldn't be long. Big lots, just stay long. Just obviously watch to see what it does at the 50. And Kroger, you can stay long on this one. You can see your Morningstar signal confirmed. I would stay long at this point. It's broken this little downtrending channel. AGQ, silver, kind of a big fry pan bottom. You can stay long on this one. It's not one of the, it's not real exciting, but it's heading in the right direction. Harmony, stay long as it stays above the T line. And SBGL. Another one that looks like a kind of a convoluted fry pan bottom. But all you can do with this one right now is stay long. I would kind of look for the J-hook pattern to be setting up on this gold stock. SYY, Cisco, finally getting some juice in it. Look for a 45 degree to come off of here. And ICE, just stay long. It's broken this little downtrend with kind of a doji sandwich breakout through this level. All you can do with this is stay long until you see a sell signal. And DHT, wouldn't be afraid to be buying this one on positive trading, anticipating it would be coming back up to the 50, which is right about where this support level was before. And CSIQ, I'd be looking to buy this one also, preferably if it broke out through this level. T-Lab, good looking chart also. Another one that I wouldn't be afraid to be buying based on the little scoop J-hook type pattern. Remember, a lot of these stocks that were in a trend, consolidate. I was going to say this probably might have a trend channel like that, which means they'd probably try to get back up into that trend channel. CGI, you have to have a lot of strength because obviously you've got this downtrend. You can be buying this one. You just have to be very aware of the 50, that if it can't get through that level, you come back out. Western Digital, this one you can be buying on strength. Just use the T-line as your stop. More than likely coming back up to test the 50. And Tiffany, same scenario. 50 right here would be the same as what the support level was before, which now they want to test it, see if it's going to act as resistance. SCAI, all you can do in this one is stay long. Nice little J-hook pattern setup. EX, same scenario, but you're in the overbought area. I would suspect they have enough juice left to at least test the 200. And once it gets there, you just watch your 10-minute chart to see what they're planning to do with it. Flowers had a big reversal signal. Remember, a long-legged doji, then they told you which way they're taking it. You can still be buying this one on positive trading if they can break through the F50. And SMCI, just stay long. Notice your trend kicker that broke you through the resistance level. Right now, you just stay long until you see a sell signal. Weyerhaeuser, you can be buying this one. It's just not a very exciting stock because of its institutional trading. But I would also suspect it could come back up and test the 50, which was the last little support level. And FAS, you can buy this one on positive trading, somewhat like the Dow. NPTN, it's got a good looking chart. If I was going to buy it, I'd buy it above this level, telling me they've moved it in this direction. Then just watch to see once they fill this little gap right here at the 50 to see what it does. Home Depot. Just stay long. Once again, not a very exciting mover. Very low percentage, but it's looks like it's bottomed. Just have to watch to see what it does once it gets to the 50. And J.C. Penney, this one you can be buying. Notice what it did today. It came right back down to the T line and acted as support, and then told us the 50 was not going to act as resistance. I would suspect your next target is the 200-day moving average. Bill, I don't know which one that is referring to. Apache or Anadarko. Another one that if it opens positive tomorrow, you can be buying it. Nice big Morningstar signal, then confirmation. Whiting we did, fuel cell. Fuel cell, watching this one, it's having a hard time getting started. If I was going to be buying this one, right now I wouldn't be in it, only because it doesn't have any real great trajectory to it. So if I was going to buy it here very soon, I'd put a buy stop just above this level because it came up through there and told me which way they were taking it. And Cent, nothing to get real excited about here. You're still in the little trend channel. Yeah, just not a great looking chart. Yeah, just can't get excited about that. 8, you can stay long as it stays above the T line. There was your message. Right now it's telling you they've stopped the selling, using the T line as support. You can buy this one on strength. If I was going to go after this one, I'd probably put a buy stop right up here, knowing it got through this little profit-taking area congestion. DGAS. Oh, DGAS. Nothing here to get excited about either. You're just caught sideways. That'd be someplace else. For some reason, this is not coming up. FCMX. BABA. Nothing here. There's your left-right combo failure. Right now, I would stay short. Looks like you've got a wave one, slow curve. I'd stay short and just use the T-line as my stop. STQ. That's not available. Shake Shack. If you like this one, you can be buying it. You had a little Morningstar type signal, bullish confirmation. Just obviously watch to see what it does once it gets to the 50. You can buy this one. Just make sure there's lots of volume on a $3 stock. I would anticipate that's your resistance because there was your support. Smith & Wesson. You can be buying this one right now. As you can see, there's nothing on this chart that gives you any great advantage. All I can say is if you were buying on positive trading tomorrow, then you just can use the T-line as your stop. Verizon, just stay long. That's a good looking chart, even for a stock that's usually very lethargic. Yeah, long time. So that breakout, if you're in it, you just stay in it. Mux, another J-hook pattern, fry pan bottom classic. At this point, you get up here in the overbought area and you're starting to gap up. You put your stop at the previous day's open. Just make sure there's plenty of volume in this one. And AUY, another one that you can be buying. I'd be more apt if I didn't own it. If I owned it, I'd stay long. If I was buying it, I'd wait for it to get up through the 50, which is also this downtrending channel. Caterpillar. Caterpillar, again, not a very exciting trader, but at this point, if you're long on that move, just have to watch to see what it does at the 50. I wouldn't buy this one. Nah, still wouldn't buy this one. There's no great movement in it. Southwest, looks like Southwest is trying to reverse. You do have a bullish engulfing. You did have a close above the T-line, so if it opened positive tomorrow, I'd be a buyer, and then I'd just use a stop where if it closed back below the T-line, I'd close it out. Is this a J-hook on the averages? No. This is just bottoming action. Remember, a J-hook occurs after a very strong price move to the upside. We did AU. AU, you just stay long. That was one of the bobbles. Hit here, pulled back, then went through, and then notice when it went through the 200, what they did. They came back and used the 200 as support as well as the T-line. You can still be buying this one. We did Slurp. Slurp also has a very good looking chart. This also is your classic fry pan bottom J-hook pattern. I wouldn't be afraid to be buying this one on positive trading tomorrow. RSX, the Russian index, looks like with the gap down, you're probably going to see a pullback to the T-line. ERX. You can stay long as this stays above the T-line. And these charts keep getting smaller and smaller. This one, you want to see it open positive. If it opens lower, it's coming back down to test the T-line again, which wouldn't be a good sign for the bulls anyways. RMTI, nothing yet. If you were short, very simple. If it trades back up above today's high in the oversold area, close out. At least it's going to come back up and test the T-line. Then you can see what it does from that point. But at this point, you're in a danger zone as far as being in the oversold area and seeing a potential reversal signal. ICPTI, ICPT. Another one that is going to move in the direction how they open it. So if you're short, I would be using today's high as a stop. If it had another day where they could continue to take it up, I'd cover my short position. Scotty, get ready to short this one if it opens lower tomorrow, because essentially you'll have a bearish J-hook pattern in progress. STX chart looks like it opened higher after the doji, then went lower before it went higher. How do you play that? If I had bought it on the open and it backed off, and the only place it backed off to was the T-line, I probably would still have sat with it because it didn't move back very far. Or if it opened positive and started backing off and I didn't get into it, and then I saw it turn around and come back up through the open, that's when I would start buying. Because if it's starting to move this direction, which way is it moving? It's moving positive, which is exactly the direction I want it to be moving, and it's doing it after a doji. Nothing here. If you had bought it over the last couple of days, it had to open positive and trade positive today. With it closing back below the T-line, all it's telling me is that this downtrend is still in progress. I wouldn't be in it. FXVM, not found. Okay, so tomorrow we watch if we wake up and the pre-market futures are positive, which they might be after the Google report. Might have a doji sandwich, which would mean another big day. Why do most trade teachers say use no more than 1 or 2% of your account for a position versus your 10%? Yeah, that to me, maybe it's because I'm confident enough that I know Susie Orman always said to never have more than 4% of your money in any one position. And my contention is that they pay analysts on Wall Street millions of dollars full time to follow 6 or 8 stocks, and most of them can't do that very well. Why would they expect somebody out here in the hinterlands to be able to watch 25 stocks well? If you're going to follow 25 stocks, you might as well just put it in a mutual fund. I use 10 positions at 10% each for 2 factors. One, maybe 3 factors. One, you can follow 10 positions fairly well. So at the end of the day, I don't want to be spending all my evening analyzing each one of my positions. I can analyze the charts on 10 positions in a matter of a minute. Secondly, each position is small enough that if something devastating happened in a position, it wasn't killing my whole portfolio. But it's big enough that I want to pay attention to each position every evening, because it's big enough that if it's not working tomorrow, it's going to offset some of my potential profits for the uh, day. So yes. And so I go on the theory that if we know what we're looking at as far as candlestick signals, then you put all your eggs in one basket, and then you watch that basket very closely. And there was one more factor, and I can't remember what it was. I'll come across it. Anyways, I don't want to have so many positions. Oh, also, because of the supply and demand, meaning every time we do scans every night, we're going to find 2, 3, 5, 10, 15, 20 good, excellent positions. And even if it's only 1 or 2 excellent positions, if I can look at those 1 or 2 excellent positions that I've just scanned for tonight, and I can look at my 10 positions, and I've got 1 or 2 in there that have already made their run, or they aren't working well, and they look iffy, then the rationale should be, why should I stay in something iffy if I've got something else that looks excellent? So this is just an easy way to cultivate your or upgrade your positioning so that you're not sitting in something that doesn't look great and you're moving your money to something over that does look great. Which means if you're always cultivating your positions to a better positioning, you're always maintaining that or keeping your risk factor lower and your upside potential higher. CNX, I'd just stay long, especially if it broke out through this level. And Icon, same scenario. It's going to move in the direction of how they open it. So let's say 20% risk on 10%. No. A lot of people tell you that if you are down 3, 5, 6, 8, 7, whatever percent, close out the position. My contention is the market doesn't give a hoot where you bought. The only thing that's going to tell you whether you're in an uptrend or a downtrend is what the chart is doing. So there's going to be some positions that you get in, and if it moves down 0.3%, it's going to tell you to be back out of the position. Another position might be 13% to tell you to get out. So there's no set percentage to say that's when you should get out of a position, because that has absolutely nothing to do with what the price movement is doing. That's just somebody's arbitrary figure of when to be in or out of a position. You try to go half long and half short positions or just follow the market trend. If I think the market trend right now is up, over the last few days, if I was predominantly short, probably some of those short positions were starting to show buying and we closed them out and started going long. So it's a natural process on its own, just based upon what the charts are telling you. So if I was short 8, long 2, over here I might have been short 6, long 4, short 4, long 6. Now might be 8 long, short 2. So each position will kind of tell you what to do, and if we can analyze that the market is turning back up, then obviously we're going to start looking for more long positions than short positions, and not so much looking for them. If you probably did a scan for both long and short positions, you're probably in an uptrend. You're going to find charts that look a lot better to the long side than short positions that look good to the downside. Let's see. I hope I just answered you, Bonnie. It's kind of a natural evolution. Is that a symbol, TK? TK, you stay long on this one, but it needs to start breaking out. But you can see what type of little pattern you're getting as a fry pan bottom with the dimple right here. Oh, dollars. As far as dollar positions, if I'm going to buy, I'm usually, whether I've got a $500,000 account that I'm buying $10,000, $50,000 positions, or a $100,000 account with $10,000 positions, if I like something, let's see, trying to think of what I like. HCLP. If I like this one, then I'm going to take one of my units, $10,000, and say, all right, if this opens positive tomorrow, I'm going to be buying 1,600 shares. Or if it opens a little bit soggy and the market's down 40 points and this is up maybe, what did it close, 607, it's trading at 611 and doesn't seem to be moving, well, maybe I'll come in and buy, what did I just say, 1,600 shares? Maybe I'll buy 800 shares. Then if the market turns and starts heading up and this starts heading up, I'll come in and buy the other 800 shares. But I'm usually, if I'm, what do I want to say, coming in with partial positions, it's usually half and half. I don't want to be spending a whole lot of times executing a trade. If I like it, I want to be buying it. And so a lot of people say, well, do you put in a limit order or a market order? If I like it, I don't care whether I'm buying it for 608 or 612 or 615, because I'm not buying it for 3, 5, 7 cents. I'm buying it because I anticipate there might be another 2 points to the upside. No, my stop isn't always at the T-line. Whoops. PROS has a nice little scoop type pattern. I'd be buying this one on positive trading tomorrow. If I'm setting, remember the Japanese rice traders, the important decision for them is where it opened and where it closed. So there's a lot of times where if you're trading along the T-line, they can trade it down below the T-line, but the important factor is where do they close it? What is the final decision? And do you get out the same way? Most of the time, but it might be half, Bonnie. I'm trying to think of one that short TRCX. Let's say we were short from up here and it was trading down here, and notice how far away we are from the T-line. Well, I've got a good profit in it. If I flip to my 10-minute chart and it started showing it's coming up above the T-line, I might close out half the position. Then I'd put my stop at some place that it shouldn't be moving if it was still heading in a downtrend. So if it opened here and traded down, then I put my other stop here for the other half. So I might come out of half a position, because my rationale is if I'm in an oversold condition and I'm short and it's gotten further away from the T-line and I'm in a higher risk situation, all right, take off half, because the worst case scenario is if it continues to go down, at least I can rationalize in my own head that I took off half when I had a good profit and it looked like it was time to come out. And then if it continued, I'm still in half the position, still making money. On the other hand, if I close some out here and then close the other half out here as it was going this way, I can at least rationalize as, oh, I got out on an average right here. That's all right with me. All right, one more. XIV. You just stay long. You use the 10-minute, 1-hour daily charts. I use the 10-minute chart. Let's see if I can figure out. Oh, I can use it because this is what I remember. This is coffee. Buying coffee here in this area. Where was our first target? Up here at the 50. So when it got up here at the 50, and it's trading right here, and it's gotten up there pretty fast, and it's at an obvious place that other people would be looking to sell it, then I flip to my 10-minute chart. See if I can find the right. And if this was the level right here, that was the 50 on the daily chart, and I start seeing it do this, yeah, I can start taking some profits. So I might close out half the position to see what it was going to do at the T-line. When it started trading down below the T-line, I'm out of the trade. Now I can get back in, but when do I want to get back in? Well, I know this level right here was the 50-day moving average resistance level. So if I got out here and it pulled back, what do I want to see it do? I want to see it start coming back up and get through the 50, and that would tell me my 10-minute chart, oh, I goofed that up, didn't I? Would be coming back up through this level, doing a J-hook pattern. I can always get back in. Did I give up some profitability? Yes, but the probabilities were that if it was starting to show signs of selling at the 50, it was time to get out of that trade. Okay, kept you way over time, and I'm sure you're waiting to see if Hillary and Trump are going to be the winners. So with that, everybody have a good evening. We will see you bright and early in the morning. We'll see you then.